All right, what's up, ladies and gentlemen? Let's get straight into this video. In this video, you guys, we're going to be talking about how you can understand daily bias better using these techniques that I'm going to give you guys in this video. And then we're also going to be talking about how to set yourself up for nice scalping opportunities so that you can pass a phase 1, phase 2 account, get funded, and start getting some payouts. All right. Before we get into this video, you guys, there's a few things that you must be aware of. The first one is new week opening gaps, all right? So I'm going to show you guys how new week opening gaps look in the chart, and I'm going to show you guys how we box those up, all right? But first, I'm going to give you guys just a quick little display of what a new week opening gap like this is, right? And then we will use a box like this on our trading view, all right? We will use a box like this, and then we will box this up just like this, all right? So for example, if our new week opening gap, gapped up, we will use the closing price. So if this is a green candle, the closing price is going to be the top of this body. And then we will use the opening price. So right here, this will have to actually go a little bit higher because if this is a red candle, then the candle will open up here and close down here, right? So that is how we will box a new week opening gap up, right? And the same thing for the new day opening gap that I have over here for you guys, right? Just a few things that you must be aware of while we're talking in this video, right? So same thing with this new day opening gap. You will box this up using the opening price of, the closing price of Sunday. I mean, not Sunday, but any of your weekdays. So let's say like if price closed Monday at 5 p.m., right? So the closing price would be up here. This would be your closing price. And then when it opens back up at 6 p.m., if this is a red candle, right, and it gaps up, your opening price will be the top of this red candle, right? And so you will box that up just like this right here. All right, you will box that up. You will put that at the closing to the opening, right? Same thing that we did. So I just wanted to give these quick little examples so you guys can know what I'm talking about. In these videos, you may hear the term swing high or swing low. This is also something that you must be aware of. If you are, a more seasoned trader, just give me a second. I want my videos to be beginner friendly. All right, so that's our swing high right here. A swing high is a 3-candle pattern, you guys, where the middle candle, right, the wick of the middle candle has to be higher than both the candle to the left and the candle to the right. So right here, this is our middle candle. It's a 3-candle pattern. The wick of this middle candle have to be higher than the body and the wick of the candle to the left of it and the candle to the right. It's a 3-candle pattern. That's going to give us our swing high. And obviously for our swing low, right, our swing low is going to be the opposite. It's a 3-candle pattern, though. Still a 3-candle pattern, but our middle candle is going to be lower than the candle to the left of it and also the candle to the right of it, right? And this are 2 patterns that you need to know because these are some terms that I may use in the video, you guys. All right, then over here we have a fair value gap. This is another term that you have to be aware of as well. And then you're going to see it's another 3-candle pattern where this middle candle right here, the wicks of the candles to the left of it and to the right of it, right? These are the 2 wicks that we're following right here, right? So we first need to find, it's a 3-candle pattern. We need to find our big wick that's going to be in the middle. Not our big wick, but the body, right? We need to find a big candle that's going to be in the middle. And then whenever you see a wick right here and a wick right here to the left of it, right? A wick to the left of it and then a wick to the right of it, this little gap inside of here is going to be what is known as a fair value gap, right? And then you guys will see me box this up like this right here. Right, just like that. That's how you guys will see me box up a fair value gap. And the same thing over here, if we see a fair value gap going to the upside, we're going to pretty much use these 2 candles right here. So it's a 3-candle pattern. Once again, we're focusing on the middle candle, but we're looking at the wicks right here that's inside of the bodies of the middle candle, right? These wicks that's inside of these bodies should leave a gap open, right? So these are things that you need to be aware of before we get into this video, you guys. All right, you guys. So this is pretty much how I start my day off. As you guys can see in the top left-hand corner, when I first started taking these screenshots, it was 3:17 in the morning, 3:17 a.m. in the morning, Monday, November the 24th. All right, you guys. And the first thing that I'm going to be doing, obviously, and I talk about this all the time, is looking at the new week opening gap. So this was our new week opening gap from Sunday, right? From Sunday at 6 p.m. All right, we had a gap up in the market. And like I told you guys, if I'm going to go and gap this market, if I'm going to go and box this up, this is how it will look on my chart. So as you guys can see, this big green candle opened down here. So it will be on the low of the body right here. And then since this was a green candle as well, right, since this was a green candle down here, we know that the closing price is going to be at the top of this body. All right. So when you box that new week opening gap up, it needs to look a little bit like that, right? Let's make it a different color, right? That's how it will look. I didn't really box it up this week because, as you guys can see from this screenshot, that this new week opening gap is already inside of a new week opening gap from September the 12th. All right. So what I did is instead of boxing it up, I just made a note to myself that we're going to be using the top quadrant of this old new week opening gap, right? So really big one from September the 12th. And then right here in this screenshot, you guys, this screenshot is just purely for me to show you guys that, these gaps really do matter. As you guys can see right here, this is a new day opening gap from November the 18th, 2025. And you guys can see how the price is respecting this new day opening gap, right? We're bouncing off of this and we're bouncing off of our new week opening gap from the September the 12th, all right? So the next thing I wanted to show you guys, and this is my actual chart that I trade off of. Now, the reason why I'm showing you guys this is because every one of these purple boxes on my chart is a new week opening gap, right? And most of these orange boxes are new day opening gaps, okay? Some of those orange boxes may be opening range gaps as well, you guys. But as you guys can see, my actual chart is really crowded. But what I want to show you guys as well, right? I'm going to take all of this stuff off the chart first. All right, so what I really want to show you guys as well on the daily time frame is this is what we're going to be focusing on a daily time frame going into today's price action. So pay attention to this down here. All right. Let's zoom out first. So today I'm going to try to put a little small box over each one of these, highs, right? Because on the daily time frame, essentially what we're looking to do is we want to pay attention to all of the, higher wicks, right? Higher and lower wicks, because each wick is going to be liquidity on the daily time frame, you guys. So that is something that we really want to pay attention to. So I'll give you an example, right? We need to pay attention to this high and this low. I'm going to try to put a small box over each one just to give you guys, a clear representation of what I will be looking for. And this is my pretty much routine that I use every week. All right. So when I wake up, I'm looking at the daily time frame. Obviously, I look at the weekly as well, but I just want to box that up because this is going to be important as we go back into our charts and look at this as well, right? At this time when I took the screenshot, it was 3:22 a.m. Monday, November 24th. So this is pretty much how I get ready when I am going into the market to find my trade, right? So if I'm looking at the market at 3:22 a.m. and I'm preparing for the New York session, the first thing that I'm thinking about is that we had a gap up of the new week opening gap, right? So price has already gapped up. That's giving us a little bit of information that, hey, we may want to go up today, right? Because as you guys can see, even on this daily time frame down here, this is how a gap up looks, right? And if you guys remember in my last video, I told you guys that it's likely that we're going to want to work up into this order block, right? It's likely that we're going to work up into this order block. And then I also gave you guys, some things like this big wick right here on a daily time frame. This is a premium wick, right? This is a premium wick because it is longer than all of the other wicks. And then also, if you guys notice, is a swing low as well, right? This daily time frame made a swing low. So I told you guys, from the last video, we may want to work up higher up into this area right here. And then we can also take a look at the weekly time frame, you guys. And on the weekly time frame, we have another premium wick in here as well, you guys. And this is something that I want you guys to go on your charts and do yourself. But I want you guys to put a Fibonacci, draw a Fibonacci on this tool right here. I mean, not this tool, but on this candle right here, because this is a premium wick candle, you guys. Premium wick candle, and that's going to be important because price likes to push back up into these candles. These wicks on the higher time frame. So you guys definitely want to be aware of that as well. So if we are looking at the 15-minute time frame, right? I showed you guys what we could also want to push up to on a 15-minute time. On the daily and the weekly time frame. So if we break it down on the 15-minute time frame, it looks pretty good as well. As you guys can see, we have some very important structure down here that we can look into on the 15-minute. We had price come down here and sweep this liquidity down here one time before, right? It had a fake breakaway gap, came down here and filled the breakaway gap, right? Made another fake out breakaway gap, but this was actually looking like the official breakaway gap because this has been left open, and then now price is starting to go up and up, right? So I will use that information going into the market. You guys remember all of this has happened, way before where we are now, right? So at this point in this screenshot, this is 9:42 price action, right? So now it's 9:42 in the morning, and we are seeing that the market is going up, right? And then this is my actual chart right here, you guys, that I have put up where all of my drawings are actually on my chart, you guys. So you guys can see that we have gapped up, right? Our gap was made right on top of this, right in the upper quadrant of our old new week opening gap, right? And then we also have price pulling up as the market opens right here. This is 9:42 a.m. in the morning. And then this pink box right here, you guys, if you guys was to go on that weekly chart and measure out that wick that I told you guys to measure out, this pink box is about 25% of that wick, right? The lower quadrant of that wick. So it's about the 25% level. This old new week opening gap right here is about at the 50% level. And then this new week opening gap is a 75% level of that wick on the 1 week time frame. And the reason why that is important, you guys, is because I'm using that wick to say this is where price can draw up into. And then obviously we're on the 15-minute time frame right now, and we can see that there's a bunch of, little gaps right here on the 15-minute time frame that's going to want to draw the market up into this area. So you can see that this screenshot right here, you guys, came from 9:46 a.m. This is about 16 minutes after the market was open on Monday. And pretty much what I'm showing you guys is this, right? So this big red box right here, this is our first presented fair value gap. A lot of you guys know how to use the ICT 2022 mentorship and learn about the first presented fair value gap. So the reason why this is going to be important, you guys, because on days where I feel like there's a really good scalping opportunity, what I'm going to do is I'm going to use the first presented fair value gap a lot on those type of days because it really matters, right? On days where I'm going for like a intraday move, I really don't have to use the first presented fair value gap that much because I'm going to be using things from the higher time frame. But that is what makes the first presented fair value gap so important, right? It's a lower time frame, very a signature level, right? It's a very important level on the lower time frames. So on days where you're supposed to be scalping, that is when you really want to learn how to use the first presented fair value gap, right? And that's going to be the fair value gap after 9:31, right? So it's like right here, this is our 9:30 candle. You should not use this gap. This is our 9:31 candle right here. So after this candle close, it makes a fair value gap. This is going to be your first presented fair value gap. And the reason why that is important is because obviously, like I said, you guys, this pink box up here, I labeled it 25% of the premium wick on the 1 week time frame, right? So this is the lower quadrant of that premium wick that I told you guys that you want to measure out. Go into your charts, open up your trading view, and measure that wick out with your Fibonacci tool, and then look at the certain levels of that wick, all right? It's the premium wick, so I know at the bare minimum, we're going to want to draw up into this price, right? So when price is Think about what price did, right? When the market opened up, it went all the way up. Now it stopped right before this key level. That is not a coincidence. Now, as it stopped before this key level, now it's coming back down and it's creating liquidity. You guys remember, everything is ran off of liquidity, right? Ignore this daily liquidity line. This is something that was on a daily chart where that I have marked out, because the thing is, right? Here's the rule, you guys. If we don't have a sweep of liquidity on the daily time frame first, right? Think about it. Price gapped up and then it eventually went up here and swept this daily liquidity, right? So after we see our sweep on the daily liquidity, what is the first thing that we want to look for, right? The first thing that we want to look for is to see if is the market going to continue to go up, or is it going to continue to come back down, right? Those are the two main questions that, I taught you guys what to look for on our daily bias video, right? So obviously this market broke above the daily liquidity, and then we have, skills and experience that is telling us our bias is that it's going to continue to go higher, right? But we also have other things that we can use, other information like the opening range gap, right? The new week opening gap. Both of those things gapped up, right? Both of those things gapped up higher. So I'm going to show you guys how I was using this in real time, right? So as you guys can see, we eventually came down here, right? After making this liquidity on the 1 minute time frame, we eventually came down, took this liquidity, and then tapped off of the first presented fair value gap. And that is exactly where I got into this trade, you guys. And I can show you guys right here. So this was my first entry when I got into the trade. I pretty much had a really good entry. This is just on one of my accounts right here. But yeah, I had a really good entry right here, you guys. As you guys can see, I was up about $363 right here on one of my accounts. Just simply taking this sweep of liquidity, touch up the first presented. We use our daily bias to say, hey, we're looking to go up today, right? We use our new week opening gap, our opening range gap. We use all of those things to give us a bias, so we feel like we're going to continue to go up, right? So that's exactly what we did. We took a buy to get all the way up here, right? To continue to work higher into that weekly wick that I was telling you guys about. So that was our first trade, you guys. Now, the problem with this trade is that I got a little bit too nervous because it's the Monday before Thanksgiving. And obviously, I went into this market with the mindset of scalping, you guys. I went into this market with the mindset of scalping. So what I wanted to see when the price was going up, I wanted to see much more aggression going up. But as you guys can see, we stopped for a brief moment and consolidated, and then we continued up. By then, I got stopped out of my trade because I did move it into profit, and then they came down and stopped me, but I was fine with my small profits. I just wanted to take this screenshot right here. It is now 10:02 a.m. in the morning, right? So I'm taking this screenshot to show you that price did continue up to go right back up here and sweep this liquidity out on a 1 minute time frame. So in this picture right here, I'm showing you guys, this was our opening range gap right here. You guys remember the new week opening gap was pretty much the top level of our old new week opening gap. So I didn't box that up. But our new range opening gaps, I did want to box that up as well, because like I just told you, that's what gave us our clarity, right? We seen that we gapped up in the market. We had a first presented fair value gap all the way up here where this red box was at. So that held price up. So if we don't even touch our new range, our opening range gap one time, what is that telling us? That is telling us that we're likely to really continue to go up higher today. And I told you guys in my last video that Monday was likely going to be the type of day that picks a direction and then it just keeps going right in that direction. And then this screenshot right here is just for educational purposes. So you guys remember I told you to measure out that wick, right? That premium wick that was on the weekly time frame. And then this is the 25% level of that wick. I just wanted to show you guys, this is why measuring out these wicks are so important. And then when you're measuring out this wick, you want to always pay attention to the midpoint of this box, because you could see that this level was actually meaningful to the market, you guys. Look at how price is respecting this level right here, you guys. So as you guys can see, it was a pretty choppy day. Even though price did just go up all day, There's no way that I was going to sit inside of all of this choppiness just to go to the next level higher, right? Even though that's what we feel like was going to happen in the first place, that is not really how I like to trade. If I'm taking a scalp, I want it to be fast. I want it to be quick so that I can get out of the trade and protect my prop firm account. So this was an update on the daily time frame. This was me showing you guys that I told you guys we're going to work higher inside of this daily order block in my last video. So I'm just showing you guys the screenshot right here that we are indeed working higher into this order block that I mentioned on the last video and on this video as well. And then you guys can see right here on this 25% level that I told you about on the weekly, we eventually, right, this price was eventually holding price down. You guys can see by the midpoint of this level, right? Look at how the candles was respecting the midpoint at first. And then as soon as we broke above the midpoint, right? Look at this, look at the midpoint. As soon as we broke above the midpoint, we came up, broke above it, gave it a retest right here, that's an entry. Gave it a retest right there, that's an entry. And then you can finally keep using this level to, get out of your first scalp and then maybe get back into another scalp if that's how you want to do it, right? But I just took a screenshot to show you guys that these levels, these wicks really do matter. All right, and then this is me showing you guys my account. As you guys can see, on that Monday, we finished up $800 on our Phase 3 E8 account. We pretty much was scalping all day, you guys. Made about 230 on our first trade. Made about, 300 something on our middle trade. And then our last trade, we made about another 100 or so dollars on that trade as well, you guys. So that is pretty much the video, you guys. I hope you guys really enjoyed that video. That is the process on how I find really good scalps and really good trades in the market. You guys have to remember one very essential thing, and that is if you don't see a raid on the daily time frame, you guys, then you shouldn't be trading in the market. Whenever you see a raid on the daily time frame, the next thing you have to do is ask yourself the question: are we going to continue to go up, or are we going to come back down? If you don't know the answer to that question, then it's best to wait for more information. But that's essentially what you're waiting for: a raid on the daily liquidity. And then after that raid happened, you want to ask yourself, are we going up or are we going down? And then you could figure that out using ICT concepts, using, some fair value gaps, some new week opening gaps. You have to use your chart to determine the answer to that question. And then that is how you figure out your daily bias, you guys. So that is going to be the video. I appreciate all of you for watching. Make sure y'all drop a like, subscribe to the channel if you haven't already. And also always remember to use code TRUCKIN if you are going to go purchase an account with Funder Pro, E8 Markets, FTMO, and Alpha Capital, you guys. Thank you so much for watching, and I will see y'all in the next video. Peace out.